Hello, everybody, and thank you for joining the Algo Maniac. In this video, I'll talk about position direction. So in the market, you may hear the term long or short, and I'm going to talk about what that means. What does it mean when someone says I'm going to be long this stock, or I'm going to be short this stock, or I'm shorting this, and so on. So in the market, there is something, there's two directions basically that any stock or contract or what have you can go. They either can go up or they can go down. If you anticipate something is going up, that means you have a bullish look on that stock. And if you want to take advantage of that bullish move, you want to buy at a low price and then later on sell at a high price. That would be called going long. It has nothing to do with the duration of your trade. It could be 2 seconds or it could be a month. As long as you're buying first and selling later. Now, the opposite of that, if you think that a price or a stock has gone too far up and now it's about time that it will turn and go down, you can also take advantage of that move by going short. Going short is when you think that the stock is gonna go down or decrease in value. And the way to take advantage of that is to sell first at a high price and then buy it later at a lower price. Now, that is unusual for a lot of people, or for some people. A lot of you may already know what that is. But for those who don't know, again, this is a basic fundamental concept in the market, which is shorting. Shorting is selling shares that you do not have, and your broker will actually find you these shares from someone else, and they'll give it to you with the promise that you will give it back. Now, if you're right, you will sell it, but you're responsible of making sure to bring it back, to give it back to its owner. And if you can get it back cheaper than you sold it, then you've made the difference, right? So think of it like you have a friend, and that friend owns Microsoft, and he has no intention of selling these stocks. Let's say he has 100 shares. And so you, on the other hand, are an agile investor. You take advantage of short moves or short swing moves in the market. So you think Microsoft for the next month is going to go down. And so you talk to him, you tell him, hey, can I borrow your 100 shares and I'll give it back to you? And you write a contract on that. This all happens in seconds. Like, you don't even have to think about doing that. When you actually have a brokerage account and you're shorting, you don't worry about any of that at all. So you just say sell, short. And your broker, if it's set up to do that, it will actually sell. It will find you some shares from someone and have like a behind the scenes agreement that you already probably a checkbox and when you were applying, and you'll be able to sell it, and the broker will make sure you bring it back. Now, in some rare cases, your broker won't be able to find you some stocks to short, and then it will have what's called an SSR, or short sale restriction. This usually happens when a stock is in IPO, just first released into the market. There's not a lot of people who own the stock, so the broker can't really find you shares to short. So just know that usually when there is a small number of shares out there, or it's a really small company, it's not very easy to short as compared to Amazon or Microsoft or any other big company. It doesn't have to be that big, but most other companies have been around for a while. There are people who own shares, and if your broker is big enough, they'll be able to get you shares for you to short. When you sell a short, you're saying, I'm selling short. And then when you buy it back, that's called covering a short. So it's just like you're selling some shares. It has no difference than if you owned the stock and sold it, than if you didn't own it and sold it. But the only difference is that if you didn't own it and then you sold it, you'll have an open position with a negative number of shares. That means you are responsible for bringing back these shares and give it back to the broker so they can give it back to the person that you took it from. Now, there's no time frame on when you need to do that. As long as you're profitable, like if the shares keep going down, you're fine. You can stay holding them. Maybe in some rare occasions where the float or the number of shares that are actually in distribution in the market are actually small, so maybe the broker will actually ask you to bring it back regardless. It's about the order of what you're doing. If you're buying first and selling later, that's going long. If you're selling first and buying later, that's going short. And obviously, you always want to buy. In both cases, you buy low, you sell high, or sell high and then buy low. So that's how you make money in the market. Now keep in mind, there are some risks with shorting. That's why not everybody or not every broker allows you to do that. And the reason is, if you go short on a stock and you expect it to go down, if it doesn't go down, it keeps going up, you actually are losing money. And one thing you need to know, and you already know that by now, there's no limit on how high a stock can go, which means there's no limit on how much you can lose. You can actually end up losing more than you invested or more than the amount of money in your account. Now, your broker is probably not going to let this happen, and they will end up covering on your behalf before you lose more than you own. So keep that in mind. When you're buying or going long, your profit potential is unlimited. Your loss potential is limited by the price going to zero. Now, the opposite is true when you're shorting. When you're shorting, your profit potential is limited to the stock going to zero, but your loss potential is unlimited. So keep that in mind, and know that shorting stocks is a risky business, and so don't do it unless you know exactly what you're doing. So when you see me in the video saying I'm going to go short, or the algo went short here, or the algo went long here, it has nothing to do with the duration of time of the transaction or the trade. It has everything to do with the order with which I'm doing the two sides of the trade, the buy and the sell. If the buy is first, I'm long. If the sell is first, then I'm short. All right, thank you very much for joining. Subscribe, like, and share, and I'll see you again in another video.